All right, guys, we got to talk about NIO's low market cap. All right. This is something that's quite troubling. And NIO's market cap currently, according to TradingView, 9.21 billion US dollars compared to Xpeng, which is at 9.33 billion dollars. You know, lower than Xpeng, but also if you think about it, NIO has more cash. Yeah, NIO has about 38 billion RMB in cash, around that number, and then Xpeng has like 29 billion RMB in cash. So a lot more cash than Xpeng. Also, deliveries, like in February, 2 times higher deliveries than Xpeng. All right, so all these things tells you that NIO should be like much higher than Xpeng's market cap, but it's not. Why is that the case? What's going on over here? NIO's clearly selling more cars, and also don't forget the fact that NIO's cars are more expensive. So NIO's getting a whole lot more revenue than Xpeng. Well, the thing is, of course, it has everything to do with losses and expenses. So whilst Xpeng has been cutting costs aggressively, right? They've been closing a lot of stores. They've been moving to a dealership model. Here in Beijing, you could barely find an Xpeng store. It's very hard. And even the Xpeng store that used to be at Hobson 1, it got shrunk down to like just a few cars and like an outdoor exhibit. Right? So they've really gone hardcore with cost cutting, and those high high rent places, stores, they've gotten rid of most of them. They're just doing dealership model most of the time, and they've really optimized cost in terms of suppliers as well. There's been a big change because of the new president of the company really optimized the supply chain and were able to get the cost down. And for NIO, of course, NIO's spending a lot of money on research into new tech, and the CEO has said that they will continue spending more money on research and new tech, and it's not something that they're gonna pull the plug on or try to trim the fat on. And also, of course, they're developing a lot more swap station infrastructure, charging infrastructure. They're placing a lot of money into that. So that just means that they're getting a couple $100 million US dollars of loss every single quarter just from R&D expenses, which is quite high, all right, considering the fact that NIO isn't profitable yet. And of course, on top of that, you have all the big stores, the new houses with these very high rents. So all of these factors combined has caused the market cap to be where it is. And investors are anticipating that NIO has bigger losses because of all these factors, hence giving a lower value for the overall market cap. And it seems overall, a lot of investors are overly pessimistic towards NIO. And you got to remember that all the money spent isn't being spent on like private jets and stuff. The research develops new patents, right? The infrastructure is something that will physically generate money for NIO with its charging stations and swap stations, also for high future potential revenue and also grid stabilization revenue as well. You know, the money, even though it's converted into assets, people seem to think that it's just burned off and burnt into the air. It's not, all right? And also, you guys got to really remember the fact that now NIO stock is quite undervalued. It's quite cheap. The infrastructure and everything itself is probably worth as much as the market cap right now because of how much stuff that NIO has, the chargers and swap stations. And yes, these swap stations aren't absolutely permanent, but most of them have like 5 to 10 year leases, around 7-year average leases. So they are quite semi-permanent, I'd say, semi-permanent. And the pessimism, I guess, from the investor community is based on its current performance. NIO's current performance, Deliveries not really that well, not really that good. Well, you gotta understand that current Deliveries do not judge the future of the company, just like how with other companies, their current Deliveries also are not an indication about how they will do in the future. Like Li Auto right now, it seems like more and more the pure electric cars are going to be very tough business for them. It seems like the Li Auto Mega, even though getting a lot of traction, not getting a lot of people locking in the orders, and even online, a lot of people selling their pre-orders and basically trying to earn a quick buck, and then they have no intention of actually taking delivery of the car. So that's quite interesting. And their success right now is basically purely based on their EREV lines, electric vehicles with gasoline that sells well. But as they shift into the EV age, that just means that slowly it's going to gradually go down. Whereas for NIO, what does NIO have in store? NIO has the sub-brand and the sub-brand coming out. NIO is already earning some money from grid stabilization. And NIO has a lot in store from these partnerships and these partners building out swappable cars. And NIO will get a slice of the profit every time they build one of these cars. And you guys got to remember, all these automobile companies out there, they do not have a moat. What is their moat? A big fridge, a big screen, a comfortable chair, comfortable sofa, nicknamed in Chinese 冰箱彩电大沙发, which is exactly those three things. No, those aren't moats. Anybody can do those. That's not a moat. Only NIO has a moat. Tesla has a first mover advantage. NIO has the best, clearest moat ever. And as time goes by and more partners come in, and the CEO has said there's many more partners, and they're going to announce them one by one, you're going to see NIO's public swap stations become the standard of everybody. It's for everyone. It's public. So NIO is becoming a power company that also sells luxury cars and also mass market cars and extremely cheap mass market cars with those three brands: NIO brand, Alp sub brand, and the sub brand Firefly. So we got a massive potential here. People seems to be pricing NIO for bankruptcy. I do not personally see that as a possibility because of how valuable NIO is. Infrastructure alone is worth around the price of the market cap. So yes, the stock price might even go down further, might see even more selling pressure and people giving in. And I personally do believe that we will see more downside before we see extremely high upside. But I do believe we will eventually see more upside into the triple-digit territory in the long term. Remember the statement, we are running close to the edge of the cliff, but NIO will not go over the edge of the cliff. Competition is fierce. The CEO knows it's fierce. The CEO anticipates that it's going to get even more competitive, and that's a good thing that he knows about it. Good things are going to happen, but it takes time. Some investors may get impatient, but that becomes an opportunity for the other people. So as NIO stock goes on discount, even more discount, are you going to be running away, or are you going to be buying for a big discount? I'm going to be doing the latter. As always, stay safe, stay healthy. Peace out.